Hello and welcome to this video. In this video, we are going to do a A-level question from paper 3 May-June 2023 variant 32 question 2. The question states that M Limited statement of financial position at 31st December 2022 has been compared with the previous year. The results are as follows. Land and building carrying value increased by $77,800. Machinery carrying value is decreased by $34,600. Inventory is decreased by $3,600. Trade receivables is increased by $5,900. Cash and cash equivalent increased by $55,000. Trade payables increased by $5,600. Ordinary share capital of share price $1 each have been increased by $140,000. Share premium have been decreased by $20,000. Retained earning increased by $34,900. 8% bank loan decreased by $60,000. Furthermore, following information is also available. The carrying value of land and building at 31st December 2021 consists of land at the cost of $150,000 and a building at the cost of $400,000. No depreciation has been provided on either the land or the building. The building was purchased on 1st January 2021. Then, a new building was acquired in 2022. On 31st December 2022, it was decided that the depreciation should have been provided for both buildings at an annual rate of 5% using the straight line method. The depreciation charges for 2022 was $26,200. The prior period adjustment had been made accordingly. Next, a machine with carrying value of $28,600 was sold for $29,500. The depreciation charge of machinery for 2022 was $42,600. Next, on 1st January 2022, an issue of 60,000 bonus shares was made on the basis of one ordinary share for every 10 shares held. The policy of M Limited is to keep its reserve in the most flexible form. The bonus issue was fully covered by the share premium account. On 1st August 2022, additional new shares were issued for cash at $1.50 per share. On 1st March 2022, the 2021 final dividend of 8 cents per share was paid. On 1st October, an interim dividend of 12 cents per share was paid on the shares held on that date. The 8% bank loan of $100,000 was taken in 2020. A partial repayment of $60,000 was made on 1st April 2022. Cash and cash equivalents at 31st December 2021 amounted to $42,000. In the bit of the question, we are asked to explain why M Limited made a prior period adjustment in information 2. We have to support our answer by stating the relevant international accounting standard and the accounting treatment. In information 2, it was mentioned that a new building was acquired in 2022. On 31st December 2022, it was decided that the depreciation should have been provided for both buildings at an annual rate of 5% using the straight line method. The depreciation charge for 2022 was $26,200. The prior period adjustment have been made accordingly. This adjustment was done based on IS 8 accounting standard. This accounting standard helps us to select and apply the accounting policy, and if there is any change in the accounting policy, how this change have to be brought forward. We also learn it from this accounting standard. That is, here we are making a change in the accounting policy. We are charging depreciation from 2022 onwards, and this depreciation was not charged previously. So how this change will affect and what should be done so as we can adopt this change, we get the information from this accounting standard. See, whenever there is a change, then we have to make the change in the amounts or the figures of the previous year for equity or for any other amounts which was mentioned in the profit or loss statement or the financial statement, and these amounts should be altered based on the change. Like here, we have started charging depreciation, so the prior period building should also be depreciated. The value for the building which was given was $400,000, and here we are going to charge a depreciation of 5%. So we get 400,000 times 5, which will be $20,000, and this should be subtracted from the previous value as well. So how do we do that? We take the previous year's retained earning which have been brought forward on 1st January 2022. From there we subtract this $20,000 so that we can make the change in the policy of our depreciation. In the B bit of the question, we are asked to calculate the profit for the year ended 31st December 2022. You see, profit for the year we get it from the statement of profit or loss. As we don't have all the information for statement of profit or loss, we can also find the profit from the statement of change in equity. So, how do we get that? In the statement of change in equity, we have the opening balance of retained earning, and to this we add the profit for the year, and from there we subtract the dividend paid, and we also subtract here for this question because we have a prior period adjustment of depreciation which I have explained in the bit A, and as this is depreciation expense, this have to be subtracted as well. So we'll get the closing balance of retained earning. Furthermore, we don't have any information about the opening balance of retained earning as well as the closing balance of retained earning. However, we have been given the change in the retained earning, that is the retained earning for the year have been increased by $34,900. This means the closing balance from this, if we subtract the opening balance, that is we are bringing the opening balance to the other side and we are subtracting it from the closing balance. So the change here which we got was an increase in the value of $34,900 for our retained earning. Next, what we will do is we'll take the dividend paid and the prior period adjustment to the other side as well. Here it is in subtraction, there it will be in addition. So the profit for the year will be equal to change in the retained earning plus the dividend paid plus the prior period adjustment. So now here the format for our profit for the year will be increase in retained earning, that is the change in the retained earning. To this we will add the prior period adjustment which we have done in the bit A of the question, and then we will also add the dividend paid. Here in the question the dividend paid was of two types, that is the dividend, the final dividend which was paid, and the interim dividend which was paid. As we have to calculate these figures, we will do it in our working notes and then we'll get the profit for the year. So now let's calculate the dividend. It was mentioned that on 1st March 2022, the 2021 final dividend of 8 cents per share was paid. On 1st October, an interim dividend of 12 cents per share was paid on the shares held on that date. As we don't have the opening share capital, so we don't know how many shares was held till 1st March 2022. So for this what we are going to do is we are going to take the other information which was given, which was on 1st June 2022, an issue of 60,000 bonus shares was made on the basis of one ordinary share for every 10 shares held. That is, they are going to issue one ordinary share if they are holding already 10 ordinary shares. So 60,000 bonus shares will be issued to how many number of ordinary shares? It will be cross multiplication, that is 60,000 times 10 divided by 1. So we'll get the total ordinary shares which was held in the beginning as 600,000. So the final dividend which was paid on 1st March 2022 will be 600,000, which will be the number of ordinary shares, times 8 cents which was the final dividend paid. So it will be $48,000. Next we will calculate the interim dividend which was given as on 1st October an interim dividend of 12 cents per share was paid on the shares held on that date. So we are going to take this bonus shares which was issued on 1st June 2022 as this is before 1st October. Furthermore, it was given that on 1st August 2022, additional new shares were issued for a cash at $1.50 per share. So this share issue is also before 1st October, we have to take it. but we have not been given the amount of new shares or additional shares which was issued. And we have the information which was given that the increase in ordinary share capital and the share face value is $1 each, and it was $140,000. So for $140,000 divided by 1, the total additional shares which will be issued will be 140,000 shares, and out of this 60,000 were the bonus shares. So if we subtract that, 80,000 were the new additional shares which was issued. So now the total number of shares which we have on 1st October will be 600,000, which was the existing ordinary share plus the bonus share of 60,000 plus the new additional issue of shares which was 80,000. So when we add this, it will be 740,000 shares, and this will be multiplied with 12 cents, and we will get the interim dividend which was paid as $88,800. Now let's calculate the profit for the year. We take the increase in retained earning, which is a change in retained earning of $34,900. The prior period adjustment, which we have calculated in the bit A of the question as $20,000. The dividend paid, which was calculated here for final dividend, it is $48,000, and for interim dividend it is $88,800. So when we add all this, we get the profit for the year as $191,700. In this bit of the question, we are asked to prepare a statement of cash flow for the year ended 31st December 2022 in accordance with IAS 7. Before making the cash flow statement, let us first understand what we have in cash flow statement in accordance with IAS 7. We start with the operating activities, then we have investing activities, and we have financing activities. In operating activities, we start with the operating profit, and then we see all the expenses which have been subtracted and have not led to any cash inflow or outflow, like depreciation. Then we add it back. Then we take the increase in the current asset, which means we have purchased more current asset, and this lead to cash outflow, hence we subtract it. Then we have decrease in current asset, that means we have sold the current assets and there is a cash inflow, hence we add it. Then we take increase in current liability, that means we have borrowed more current liability which lead to inflow of cash, hence we add it. Then we have decrease in current liability, that means we have paid the current liability and it lead to outflow of cash, hence we subtract it. Next we have investing activities, in which we deal with the non-current assets. Increase in non-current assets means we have purchased the non-current assets, and when the non-current assets are purchased, there will be outflow of cash, hence we subtract the amount. When the non-current assets are decreased, that means we have disposed of the non-current assets and this leads to inflow of cash, hence we add. Next we have the financing activity, in which we take the non-current liabilities. Increase in non-current liability means we have borrowed more and it will lead to inflow of cash, hence we add it. And decrease in non-current liability means that we have repaid the non-current liability and it will lead to outflow of cash, hence we subtract it. Then we have share capital and share premium. Increase in share capital means we have issued share and this will lead to inflow of cash, hence we add it. Decrease in share capital means the shares have been redeemed and this will lead to outflow of cash, hence we subtract it. In shares, we do not take the bonus shares in the cash flow statement because bonus shares are issued from the free reserves and it will not lead to any inflow or outflow of cash. So let's do the workings before making the cash flow statement. We'll start with the operating profit. We have operating profit, which means the profit before interest and tax. We have the profit for the year which we have calculated. To this we add the interest and we add the tax if there is any. However, we don't have any tax here, so it will be plus interest, we get the operating profit. For the interest, the information which was given was 8% bank loan of 100,000 was taken out on 2020. A partial repayment of 60,000 was done on 1st April 2022. So 8% is the interest rate. The value is $100,000, and as we will calculate for the first 3 months, that is from 1st of Jan till 31st of March. Why? Because there is a repayment on 1st of April. It will be 3 by 12. So 100,000 times 8% times 3 by 12 will be $2,000. Then on 1st of April we have done a repayment of $60,000. So from 100,000, if we subtract the 60,000, we will be left with $40,000. And the rate of interest is 8%. The duration is from 1st of April till 31st of December, that is 9 months. So it will be 9 by 12. 40,000 times 8% times 9 by 12 will be $2,400. Now our operating profit will be profit for the year, which we have calculated as $191,700 plus the interest of $2,000 plus $2,400 will get the operating profit as $196,100. Next, we have the information a new building was acquired in 2022. On 31st December 2022, it was decided that the depreciation should have been provided for both buildings at an annual rate of 5% using the straight line method. The depreciation charges for 2022 was $26,200. The prior period adjustment have been made accordingly. We don't have the total value of both the buildings. So what we will do is we'll take the depreciation which is given as $26,200 and here the rate is 5%. So $26,200 is 5%. 100%, that is the total value of the building, will be how much? So if we cross multiply it, it will be 26,000 times 100% divided by 5%, which will be $524,000. The old building value was given as $400,000 in the additional information. So the value of the new building which was purchased will be 524,000 minus 400,000, which will be $124,000. And as this is the purchase, this will be the outflow of cash. Hence, this amount will be subtracted in the investing activity. Next, the information which is given for non-current asset is a machine with the carrying value of $28,600 was sold for $29,500. The depreciation charge of machinery for 2022 was $42,600. So, normally when we make the statement for profit or loss, we take the value at which we have sold the machinery, that is $29,500. From there we subtract the carrying value, which is $28,600, and we get the profit on disposal of $900, and this will be added to the gross profit when we make the statement of profit or loss. However, this do not lead to any cash inflow or cash outflow. Hence, we are going to subtract this 900 in our operating activities. Furthermore, this $29,500, which was the value at which we have sold this machinery, will be the inflow of cash, and this inflow will be added in the investment activities. Furthermore, based on this information, the total decrease in the value of machinery should be the machinery which we have sold, the carrying value was $28,600, so this should be the decrease. Furthermore, there was decrease in the machinery because of depreciation, which was $42,600. So together that is 28,600 plus 42,600, which will be 71,200, should be the decrease in the value of machinery. However, it was given that the decrease in the value of machinery was just $34,600. This means there was some additional purchase of machinery, and this we will calculate by using the formula opening carrying value of asset plus purchases of asset minus disposal of asset minus depreciation is equal to the closing carrying value of asset. When we transpose this opening carrying value of asset to the other side, it will be purchases of asset minus disposal of assets minus depreciation is equals to closing carrying value of asset minus the opening carrying value of asset. This is given in our information, that is change in the value of asset or the change in the value of machinery was equals to closing carrying value of asset minus the opening carrying value of asset, and this was given as a decrease of $34,600. So if we don't have any purchases, this will be minus disposal of asset minus depreciation, because both of this will lead to reduction in the value of machinery, should be equal to minus $34,600. That is, this should be the decrease in the value of machinery which was given. However, this decrease, that is minus 28,600 minus 42,600, which will be equal to minus 71,200, is not equal to minus 34,600. So that means we have purchases. Now we are going to find the purchases using the same formula, that is purchases of asset minus the disposal of asset minus depreciation should be equal to minus $34,600. So we know the disposal of machine plus the depreciation together will be minus $71,200. Therefore, purchase of machine minus $71,200 will be equal to minus $34,600. We will transpose this $71,200 to the other side. It will be in addition on the other side, as this is in subtraction on this side. So now we will have purchase of machine will be equal to minus $34,600 plus $71,200, and we'll get the value as $36,600. This is the value for purchase of machine. As we have purchased this machine, there will be an outflow of cash, and when there is an outflow of cash, this should be subtracted in the investment activities. Next, we have the financing activity, in which we have issue of shares, and the new issue of shares which we have calculated previously was 80,000 shares, and the face value of share was $1 each. So it will be 80,000 times 1, which will be $80,000. And then it was mentioned that it was issued at a price of $1.50. So the 50 cents will be the share premium. So 80,000 times 50 cents will be $40,000. So the total inflow of cash from the issue of shares will be 80,000 plus 40,000, and this will be $120,000. And as this is an inflow, it will be added in the financing activity. And now let's proceed and make the statement of cash flow for the year ended 31st December 2022. We'll start with the cash flow from operating activities, in which we will start with the operating profit, that is the profit from the operation, which we have calculated in the first working notes as $196,100. Then, as I told you, depreciation is neither inflow or outflow of cash, but when we have calculated the profit for the year, we have subtracted this expense. And now, as this is neither an inflow or outflow of cash, we are going to add this back. For building, it was given as $26,200, and for machinery it was $42,600. So this will be a total of $68,800, which will be added back. Then the gain on disposal of machinery, which we have calculated in the third working notes, and this was added when we have calculated the profit for the year, but this is neither an inflow or outflow of cash, hence we are going to subtract this $900. Then decrease in inventory, this is reduction in the current asset, that means we have more inflow, hence the value of 3,600 is added. Increase in trade receivable, this is increase in the current asset, which leads to outflow of cash, hence we subtract $5,900. Increase in trade payable, which is increase in our current liability, as there is more cash coming in, hence we add this $5,600. So after adding and subtracting, we get the total as $267,300. From here we subtract the interest paid, which we have again calculated in the first working notes, which was a loan interest of 8%, and we got this as $4,400. So when we subtract this, we get the net cash from operating activity as $262,900. Next, we have cash flow from investing activity, in which we have the purchases of building, as this lead to outflow of cash, which we have calculated in the second working notes. We are going to subtract this value as $124,000. Sales proceed of machine, as this leads to inflow of cash, we are going to add this as $29,500. Then the purchase of machinery, which we have calculated in the third working notes, as this lead to outflow of cash, we are going to subtract this as $36,600. So minus $124,000 plus $29,500 minus $36,600, we get the net cash used in investment activity as minus $131,100. Next, we have the cash flow from financing activity, where we have issue of shares, which we have calculated in the fourth working notes as $120,000. As this is an inflow, this is added. The repayment of bank loan, this is an outflow which was given as $60,000. As this is an outflow, we subtract. Then the dividend paid, which we have calculated as $48,000 as final dividend, and the interim dividend of $88,800. Together it will be $136,800. As this is an outflow, we subtract. So 120,000 minus 60,000 minus $136,800. The net cash used in financing activity will be minus $76,800. Now we do the total, that is, we take the cash received from the operating activity and we subtract the cash used in investing activity and the net cash used in the financing activity. So we get the net increase in the cash and cash equivalent as $55,000. Then cash and cash equivalent at the beginning of the year was given as $42,000. So when we add this two, that is $55,000 plus $42,000, we get cash and cash equivalent at the end of the year as $97,000. With this, we have completed this question. Thanks for watching my videos. Have a peaceful and blessed life.